Gino, it's all about the roadmap and it's about following the three-legged stool. It's about following the wheelbarrow. And look, you're not trying to reinvent the wheel. You have a solid framework in place and you follow the yellow brick road. What are we talking about today? We are talking about buy right, manage right, and finance right. It is the three pillars of sound multifamily investing. G-Dad, hit me with some buy right.
So, Jake, let's let everyone picture a wheelbarrow. Let's really get the picture of what we're talking about because we all think in pictures. So there's a wheelbarrow right in front of you. Jake Stenziano's sitting on the grass. He loves burning stuff. He's cutting the grass. He's sitting out there one day. He's sweating, and he says to himself, "Wow, three legs. There's two back legs, and there's a wheel. I just got something, Gino." He calls me up, and I'm like, "What's going on?" He goes, "Well, I'm out there burning stuff, but this wheelbarrow represents what we should have done from the very beginning." Now, let me get into it. The back leg, he's like, "That's buy right. When you buy the asset, it's done. It's fixed. The other leg is the finance right portion. When you finance an asset, that's done. That's fixed also. The third leg or the wheel is the manage right." Now, why did Jake think of that as the manage right? Because we're vertically integrated. We manage our own properties. It's in constant motion. You're constantly doing manage right. And if you're not managing the property, there's a third party property manager that you have to hold them accountable to. So always visualize any asset that you're buying in multifamily. This can be even going into single family if you like, or even self-storage. But for multifamily, it really is those three legs. If one of those three legs wobbles, what happens? Your wheelbarrow tips over. You have to focus on all three of them and set parameters. For us in the beginning, we didn't have buy right. We were just looking for deals. We didn't know how to finance a deal and manage right. We had no idea what manage right looked like. It was like door knocking it all, but that's all right. We all have to start somewhere. So when we hit upon that and Jake called me up, I'm like, "Jake, this is great. Let's create this framework and let's break it down into the buy leg, the manage leg, and the finance leg." And what does the buy leg look like? For us, our clarity, and this is what everyone has to focus on. What are your parameters? What are you looking for? We're going to talk about the three pillars of real estate in a little bit. But right now, when you're setting up your buy right parameters, it's all about what you want. How much capital do you have? Where are you going to be investing? How much time do you have? What are your goals with multifamily? Do you want to do this passively? Do you want to do it part-time? Do you want to transition into it full-time? We didn't have those thoughts when we first started. We just wanted to buy assets. That's all we wanted. And there's nothing wrong with it, but we were a little confused. We didn't lack motivation. We lacked clarity. And I think that's one of the best things about this framework, buy right, manage right, and finance right. It's going to offer you the clarity. Now, I'm going to hold up the first book here. This is the Wheelbarrow Profits book. This is our book that wrote about the three steps in here. So I want you all, I'm going to leave a link down below. Go grab it on Amazon. If you buy it and you leave us a review on Kindle, I will send you a hard copy in the mail, gino@jakeandgino.com. So I'm going to be giving away the farm here a little bit. Jake's going to be cutting me off and going, "Stop giving away the farm." But this is an important podcast for us because this is going to lay the groundwork, the foundation. When you're building a business, when you're building a building, or when you're building a multifamily experience, you're going to be becoming a multifamily entrepreneur. That foundation has to be strong. So let's focus on all three of these pillars. Once again, the buy right. What is your criteria to buy right? Let's focus and go really deep, really granular. What cash on cash returns are you looking for? What type of cap rates are you looking for? What debt coverage ratio are you looking for? What type of market? When you're first starting out, I don't want you in 4 or 5 different markets. Focus on 1 or 2 markets. Become a master at those 1 or 2 markets. Start creating those relationships in those markets. That's how you're going to get deals with relationships. Let's get even more granular. What age is the building? Is it a pre-70s? Is it 1980s? Is it brick? Is it pitched roofs? Because I can tell you one thing, if you could say no to something, you're going to get to that yes a lot quicker. If you get really drilled down and you're looking for a certain type of asset, Jake and I, what do we like? We like the mom and pops. That's what we're looking for. We're looking for mom and pops right now. And we're going to drill down in certain, every market has different criteria. If you're investing in Nashville, cap rates are different than investing in Cleveland. That's why focusing on that one specific market is going to really help you out. So that buy right is crucial into focusing on what you do want. And when you're speaking to investors or brokers, you're ready, you're prepared, you're going to sound professional, and you're going to find that deal a lot quicker.
I'm going to give the folks a little meat. A nice salty turkey leg right now
Mm.
because it's
I'm
getting
more
late.
I'm more favorable to wings, but if you're gonna give me a leg, I'll take a wing. I like
Well,
dark meat, bro.
we can still get the buffalo sauce on the turkey leg. It's not a bad thing. But so we have Gino's talking buy right, and we basically target two deals. And what did Gino just say a minute ago? You need to have your parameters set. Think of someone sifting for gold. Okay, it's the
Mhm.
same thing when you're looking for deals. You're sifting for gold. You're underwriting deals. You want to be able to analyze them quick, get rid of the garbage, so you can get down to the gold and what you really want. Okay. How do we do that? We have two primary deal types. We call them deal A and deal B. Deal A is down the fairway. It's going to have what we call agency debt or Fannie Mae or Freddie Mac financing, or maybe even, potentially CMBS. It just doesn't seem to be in the picture right now. Or it could be a HUD deal, like a 35-year fixed. Okay. So we're looking for non-recourse long-term financing, a deal that we're going to be able to place with that type of debt. It's going to be in a good market. Okay. It's going to be of a good vintage, meaning that it's probably sometime in the 1980s or later. It's going to have
Mhm.
pitched roofs, it's going to have central heat and air, all the types of things that we know our folks are looking for. And it's going to have cash flow from day one. It may be something that is interest only for 3 to 5 years with really good cash flow where we know we can gradually increase rents. We're long-term buy and hold investors, so we want to see cash flow continue out through the life cycle, and we're going to get cost segregation on it. So we know it's going to be great for our taxes. So that is your relatively clean, stable asset that we're going to be able to buy with cash flow from day one. Then there's deal type B. This is your monster. This is something that we did last year. We like to do only one of these at a time because, as Gino alluded to earlier, we're vertically integrated. We manage the entire process. We manage the turns. We manage the renovations. So these deals, what we like to do, we typically use what we call bridge financing on these deals. You can use a community bank. You can use a traditional bridge lender with non-recourse. Will it ran cap if you're looking for something like that. They have some really great products. These deals, though, the last one we did, Gina, we cleaned the whole house out. I mean, ultimately, it was 50% occupied when we got it. By the end, there was like 10 folks left. We went through, we basically gutted every unit, redid the parking lot, redid the roofs. Gino was telling me to tear down a gazebo, but we even saved the gazebo. We turned the office into 2 additional units. That's actually going on right now as we speak. New RAND flags everywhere. The beautiful RAND blue flying in the sky, and new lighting throughout. I mean, we just from top to bottom, we just renovated this entire complex. Now, that those can be very lucrative, but they can also take a lot of bandwidth. They can take a lot of resources from your team. That's why we recommend folks probably not doing that on your first deal, but also doing one of those at a time as you grow. Maybe when you get bigger and you really get into it, you can handle 2 or 3 of these, but they are very intensive to manage, and they do take a lot of your team's bandwidth. So when you're talking buying right, think about what we just said, having parameters. We're so clear. We have 2 deal types that we look at. There's certain times when we look at those deals. There's specific markets that we're looking to do these in. When you have this type of clarity, you can sprint, you can run. You're the slingshot, and you're going. When you don't, things are confusing and you lack clarity. Not having clarity slows you down so much in this business. You need to get clear on what you want and then attack with and be aggressive about it, because it's a competitive market. And if you're not clear and you're hemming and hawing, someone else is going to be more aggressive. Because as the G Dad likes to tell the story, the minute that deal came across his desk, he sent it over to me. I was out there the next day looking at it with the team. We locked it up, and the rest is history. That's how these things go in a hot market.